Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. So it was definitely felt like a really long day. I know this morning I came in long and futures were down. I figured maybe they would, push the market positive, maybe even test that pivot, going into the Fed. So at least get a good way out of it. Maybe look for some cash flow trades in some of the strong sectors from yesterday to go green, kind of like the banks did. When the oil number came out, oil didn't go down and went up. That was a good trade. And then, the Fed came out and they were dovish. They were pretty much what people thought they would do or wanted them to do, but then the market used the pivot that we talked about and went back below it, and then that was your sell signal. And then pretty much, was sold off the whole afternoon and then had a little bounce at the end of the day, and now the question is, what's next? You look here at the chart of the SPX and you'll see, first of all, last time we had like a topping tail after a move up. Remember we were talking about this resistance right here. Would we get a move above this? This was way back when, just to give you another time, and come back below to spark a new down move to create like a double bottom, or would we go above this and that would have been a continuation of this V bottom? So you had that topping tail. So today I was kind of thinking, what would we get today? Would we get a push above 1906, close strong, and then perhaps work our way up to here? Or do we get a push through failure and then this create, a wedge that would then resolve to the downside, for a move back down to the lows because of all of the craziness out there in the world. What do I mean by craziness? You have Tim Cook saying that he's never seen things like this, with his very bearish remarks, and it makes you think that that the environment is that bearish, and we're still only 12% off highs. So although it feels as if we had this big down move, we really haven't had such a big down move. Obviously, so there's some stocks that are down 70, 80%, and oil's been crushed, and oil stocks have been crushed, and et cetera, but overall the indices, especially the S&P. So anyway, at this point, let me just put up the spiders. The spiders, I talked about that wedge formation. Which way would the wedge break? Okay, and the wedge, I would say it's more neutral to negative than positive. Pushed above this spot, made a quick high, couldn't get back above it. I sent a tweet out saying, make it simple. If we're below 190, get neutral or negative. If we're above it, maybe try and be long. Well, at this point, you're still kind of in this wedge. There's still a little indecision, but a little bit more neutral to negative but this day we were neutral to positive. So, this back and forth kind of is a little tough, so you just have to take it easy and you go real quickly to the 5 minute. At least the day was kind of made sense. The day you had some continuity where you gapped down and then never filled the gap. Okay, which is so I was long the spiders, I was long IWM, I was long JP Morgan. Figured you could add here. Then it gave you a trade through the highs, went back to prior resistance, which is right here, and then gave you that push up. Okay, so this was a nice calculated trade into noon, which they pressed the envelope before the Fed, so you didn't have to worry about it. Then we came in, and then on the Fed news, you had this one move back up, okay, right here, and then here was your topping tail. So right here is pretty much where I had my stops for my longs. I said if it gets back below 190.50 or even 190, you have to be somewhat neutral, okay, neutral or out. And I did lose some money because I bought right here, and I wound up selling there, but I didn't get, stubborn. Then you had to move down, and then this is pretty much where I got short on the VTF on this rally back. And then I covered a decent amount, probably down here. And then in this bounce back, I shorted a little bit more. So I'm short a little bit overnight. I'm short about a tier 1. So tomorrow, I know Facebook's up after hours. Maybe, you get a retracement. We'll measure to see what kind of resistance there is. This tomorrow would be a pretty big resistance, or here. But at this point, I would say, today I was looking at a lot more negatives than positives. Even as the spiders tried to rally, like you look at the IBB that never, got above that pivot, and the bios, are right back near the lows of 2016. This was one sell when it broke the ascending channel, another sell when it broke the ascending channel, another one, and now it's right here. So that's kind of bearish. Remember, I thought perhaps it would get above this 290. Well, it didn't. I got a little long that day like everyone else, lost money right there. I haven't touched it since. It could have been a lot worse. So now we'll see if it breaks this to the downside. Came in long the IWM. They did go green. They were kind of weak all day. Still, you look at it, it's kind of tight. It's not really giving you much of a bounce. You have this bear type flag. The question is, will it get downside follow through? I thought maybe there'd be a rally back to the 21-day, which there could have been, and there still might be. Who knows? But once you start breaking below this, people will be out of the way. And then really, I talked about Apple. Talked about the head and shoulders top pattern in Apple over a month ago that gave you a measured move to the low 80s. I was saying to people, like, when it was in the hundreds or the high 90s, everyone's like, Redler, when do you get in? I'm like, I'm not even interested until 92. And it went to 93.5 last Wednesday, so I kind of missed it. But today, I just avoided it, just because I'm really not a great short, and I just stayed away from Apple. But at this point, you look at Apple, one of the most over-owned or most successful companies in the U.S., et cetera, that now, before the S&P, just took out last week's low. So that's pretty negative. And here you have another gap now, a gap down that never got filled. So that's very bearish. Kind of like this gap down. Remember that after this earnings, it never got filled, and then it continued to the downside. Gap down, never got filled after that earnings, stayed down here, and then broke a low and boom, and continued. So anyway, I've been pretty bearish in Apple ever since I got stopped out around 115 right there, but better there than down here into this mess. So now your next point of reference is the flash crash low, which is 92. I could see that tomorrow. Maybe it tries to bounce off it, maybe it doesn't. But again, very bearish. It's been below the 200-day since 117, so I don't care what stock it is, what your love affair, how much it's made you. You get out when it breaks the 200-day. And as traders, you typically get out when it breaks the 8 and 21-day, and it's been below now the 21-day for quite some time. And then if you want to talk about the bearish weekly pattern, it's showed its face for a while, where you have your left shoulder, the head, your right shoulder, and basically broke the neckline around here. So you had a little bit of a rally back up, and guys are saying, what was this, 130 down to 108? That's about 22 points. My brain power is not so great right now. It's been a long day, but you're talking the 80s, and it's right here, looking real weak. Netflix gave some clues that that high beta was weak, had a decent earnings report, and couldn't rally whatsoever after it. Remember, we were sitting here on the recap the day of the earnings, and I was like, if this thing can't get above 116 on that report, run for the hills. Okay, on that day, boom, tried to rally up, boom, broke below the 200-day, get out of the way, closed on the dead lows. So Netflix has officially changed. It changed really more when you had this outside day right there, but obviously it can't be too perfect. Look at that candlestick. That was a pretty potent down move right there, right? Reversed, closed on the lows. That's what you call an outside day. You get out. That's what you take notice. Then it never got back a third of that, so that means that there was commitment to that. And then another, sell the strength, and here's when earnings, and now it's below the 200-day, and it's not the same stock that it was. Sorry. We'll see what happens with Facebook. I think they really wanted to sell Facebook, but the earnings report was really that good. I'm not going to get here. Come to me. I'm not going to get into all the metrics, but their earnings were higher, their revenue was higher, their mobile ads actually increased, their MAUs increased, so everything was better. So we'll see how that reacts tomorrow. You look at the chart, probably the same type of thing now. You have a few different levels of resistance. This would be one resistance, and then I was thinking that this would be where they would contain a bounce. Okay, so from right here into this, but who knows? Maybe they'll let Facebook trade on its own. It's still a high multiple stock, but those numbers were pretty darn impressive. So we'll see how it treats the gap tomorrow and what it does with the overall markets. You did have oil bounce a little bit today, but the market kind of disconnected from it. If you look at the USO, kind of hung out. Another big build, but the market didn't care. So I guess you'll see tomorrow if this takes out this little pivot area. If it does, maybe it'll help more than it'll hurt tomorrow. The XLE tried to be strong. It still has a bit of, just like everything else, this wedge pattern where I made good money long this actually off the oil number, but then it kind of failed, and this one has a doji in the middle, so it's not sure what it wants to do. I guess if oil goes up tomorrow, maybe it gets a little bit more help. But overall, it's been broken for a long time. The banks helped out today. Yesterday they had their first green day. So this morning I was long JP Morgan. I said, let's buy it red to go green and maybe push up and get a good extra cash flow trade, and that's what happened. And now, it kind of held in better, but just like any broken thing, trades above a level, can't hold it, you get out one day into another. If you want to look at, we were watching Goldman Sachs off the open, and Goldman Sachs, also ugly doji. But if you look at the 5-minute for intraday stuff, it made sense. Strong day yesterday. You had your gap down today, and you were able to make some money if you look at it the way we do here. Okay, so this was your gap down right here. All right, let me get the gap down. Sorry. After closing strong, after its first up day, so I figured go watch Goldman. If Goldman goes green, other banks can go green, and opened down, traded back into resistance and pushed above. Went from down $1.25 to flat to up $1.25. So you bought it in the hole, added when it went positive, sold some. That was a good little trade, especially if you didn't take it overnight. Came back, higher low, and then gave you an even better move before failing right here. Look at this ugly bar before, coming back in. It was still a weak stock, weak sector, but different type of trade. Here was your follow through from the prior day, which you had a little bit of, and then your, again, and then this was your dovish remarks versus hawkish remarks. So how the hell are the banks going to make any money? But we'll see. So in closing, wasn't an easy day. It felt like a long day. You had a little bit of a relief. If you went out long like I did yesterday, you went from negative to positive. Then they actually gave you a little bit of a trade too, right? Above that 190.50, went as high as 191.50, so they gave you a little bit of follow through that area. It was really 190.25 to 190.75, so at least it didn't push through by 8 cents and fail. But now, the way it closed, it's hard to figure out what's next. Things definitely look more bearish and bullish. The one thing I will say is the day after Fed Day sometimes does the opposite action. But it's typically a trend day. So if it's going to open up and stay up and go, it's a trend day, or open down, who knows. So, if today wasn't a Fed day and we went the way we did, I'd probably be a lot heavier short. But because it's a Fed day, you have the end of the month on Friday. Who knows if they really want to obliterate them and scare the, bejesus out of people that get their statements for the month, So they might try and hang in there, which will make it harder. So if you're kind of neutral or flattish overnight, that's fine. You'll have more than enough opportunities tomorrow to figure out where you could buy and where you could short, but at this point you should still be very, very tactical versus sitting in longs, and none of you have been that way for a while, so that's cool. Have a good night. I hope to see you at my webinar tonight. I better get some food and coffee because I could use it, and I'll see you later.